Welcome to XM.com. This is the Daily Market Comment by Raf Boyajian. I'm Christina Marujos. Russian and Ukrainian negotiators meeting in Turkey made the first meaningful progress to ending the month-long conflict on Tuesday, lifting the mood across financial markets. Ukraine proposed a new security guarantee mechanism in exchange for adopting a neutral stance. But more significantly, Russia said it will reduce its military operations around Ukraine's capital, Kyiv, and another city. The statement was received with skepticism in Washington, with the Pentagon warning that Russian troops may simply be repositioning and regrouping elsewhere. Nevertheless, markets took this as a sign of de-escalation, as hopes were raised that a ceasefire agreement can be reached. The S&P 500 ended Tuesday's session up 1.2%, closing at a two-month high, while tech shares rallied for a second day, pushing the Nasdaq Composite 1.8% higher. European stocks also made strong gains yesterday, and Asian markets closed mostly in positive territory on Wednesday. However, U.S. stock futures were slightly lower at the European Open, suggesting the market optimism has gone as far as it can for now. After the brief inversion of the curve between the 5 and 30-year Treasury yields on Monday, it was a turn of the 2-year yield yesterday to momentarily rise above the 10-year yield. That inversion of the latter part of the curve is usually seen as a reliable indicator of recession, though investors and Fed policymakers would probably want to see a more extensive duration of inversion before panicking. The Fed has ratcheted up its hawkish rhetoric lately, bolstering expectations that the central bank will hike rates by 50 basis points at the upcoming meetings. In the currency markets, the US dollar has headed sharply lower for a second day. The Japanese yen, however, was on the rise on Wednesday, despite a steep drop in Japan's 10-year yield. The Bank of Japan has been actively buying Japanese government bonds all week to push the 10-year yield below its upper cap of 0.25%. And even though the bank had more success today in lowering the yield, there is growing speculation that the current target band is becoming unsustainable. The euro was the biggest beneficiary among the major currencies from the progress in the Russia-Ukraine peace negotiations. The single currency jumped more than 1% yesterday and is extending its gains above $1.1150 today. Thank you for watching today's Daily Market Comment at XM.com.